Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 6th day of March 2015, and this is the daily report for gold and silver, our weekend review. Well, it's not all about that base, but it is all about the dollar today. Dollar absolutely surging above 97, currently trading at 97.64. You can see that on this weekly chart. Of course, the net result is a virtual meltdown in the precious metals markets. Equities also trading solidly lower on the day. First, let's take a look at gold, and then we'll get to the other markets that we do follow. Gold currently trading off about $31 on the day. Now, the low is 1163.30. We're just close to that, and it's matching this low at about 65. We'll talk about that in a second. The high, 1199.40. That's pretty irrelevant at this point. Silver also taking a tumble today, off about 34 cents. That's about 2%, just a little bit over 2%, whereas the gold market is currently trading off 2.65%. So in terms of percentage drawdown, gold is definitely the leader today. When we look at the silver market, we are well below 16, 15.88. That is our current print. And of course, we haven't had that same kind of a range that we saw, high 1619, low 1576. We'll touch on silver at the end of the show. So traders, let's take a look at what we saw transpire today. The dust still hasn't settled, but a tremendous sell-off in the equities markets. Tremendous sell-off in the precious metals markets. Tremendous gain in the dollar index today. Dollar just surging. And as you saw from the chart that we put up, the Kitco Gold Index, off of this $32 drawdown, only about a half of this drawdown, I say only, but $16 of it is directly attributable to sellers in the market, pushing the marketplace lower. But due to strength of the dollar, you got to add another $16 to it, and that's where we get that drawdown of 2.71%. And when we look at the totality of the move today, you can see that we are pretty much at the most recent lows of 1165, currently trading roughly at 1166 on the day. Now, as we mentioned at the beginning of this report, it really has been all about the dollar. And I'm going to go ahead and pull up our weekly chart. You can see this dynamic surge. We talked about the fact that we saw for the first time since 2003, this was just the other day, that we were actually trading above this, or just at this particular resistance area. Now, when we look at this resistance area, we really have to go back in time. In other words, here's 2005, and we have to go back to about 2003 before we see this particular price point come in right here. And you'll also notice that it is precisely a 50% retracement, that 96.27 of this entire range. So this has been one substantial move in the US dollar, and that has really sent these markets in a spiral. Not only the gold market and so not only the precious metals, but also the equities markets. So traders, you know that we have been talking about a very strong potential all throughout the week that we would see dramatically lower pricing. And we were basing it on the fact that when this market, during this most recent sell-off, meaning 1306 down to these intraday lows at 1191, we identified a key level at 1198, that being a 76/61% retracement, meaning whether we start from 1131 or we start from this point right here at 1165, that's what gives us these harmonics, because they both conclude at this point. I mentioned on yesterday's show that there's two basic strategies that I would suggest. The first strategy is if we, and the market was obviously trading right at 98. The first strategy was that if we see this market rally in any way, as soon as we see it stall anywhere up to roughly 1221, then go ahead and short the market because we'll see it exhaust. The second strategy that I talked about yesterday that traders should implement or consider implementing was any kind of a solid break below this point, go in and initiate a short position. Now, this entire sell-off happened rather quick. In other words, early in the morning as the jobs report came out, we saw trading lower by about $20 on the day. We had almost an interest in a quick kick to the downside. And I did get emails this morning from multiple subscribers saying that they did enter the market on the short side, taking our suggestion here when it broke, and they asked where they should place their stop. Initially, I was thinking 1198, but now with the market this much lower, I will send out a special stop alert for those that did enter the market on the short side. Officially, we did not, but we did recommend those two strategies yesterday. And in fact, about 4 in the morning, I sent out a couple of charts to illustrate the dynamics of what we were witnessing in the market. And I think at that time, we're about $10 off of the lows. We're trading roughly at around 76. In fact, let me go ahead and pull one of those charts up because what it talks about, I think, is incredibly important. So traders, I sent out 2 charts, one showing a minor level of support, which was roughly at 1175, and we did break through substantially. I'll show you our current level of support in a second, but this to me is probably the most important piece of the puzzle right here, and that is we're looking at our weekly chart, and on this weekly chart we identified a long-standing resistance line, that being here, that we absolutely broke above. You can see that here, but we talked about over the last couple of weeks that it was running into this point, and it just so happens that they intersect roughly at this series of bottoms that we have, where you've got a series of lows here. These are 1180 and then 1161, 1131, but this whole area right in here we've identified as a absolutely critical area. The harmonics are telling us this is a 50% retracement from the major move in gold, 400 to 1900. The secondary one is from about 700. It begins here and then culminates at the record top at 1920. My sense is that if we break through this point, and at this point we're right there, we're right at it, but if we break through this particular support level, we could be in for a roller coaster, because on a long-term chart, if we breach the 50%, the only logical place we could see this market go to in terms of long-term support is going to be this 61/76% retracement. So this is what I sent out last night. If we break this major support level at 1168, then $1,000 gold becomes a real target. And I absolutely believe that that is possible. And more importantly, we're right at this particular crossroads right now. So traders, what I do believe is we certainly have an opportunity to see this market move to the downside anywhere between 100 and 150 if we get follow through and the market continues to break lower as it opens next week. So trader, the second chart that I sent out was attempting to look at the minor support levels that we were currently looking at in gold. Now, at the time, I put a minor support level at 1175. That's this retracement. It barreled right through there. Right now, we have 2 levels of support, and I believe that they're minor support because, as I said, major support actually does fall right in here at around 1168, but minor support right now has got to be these lows here, 61 here, 66 here, but we did have that low that came close. If it does break below this low, then it really threatens to take out this level, which is roughly at 58, and that 58 of course corresponds with our major support level. And let me see if I've got enough data points to bring this in, and so we can see where this actually came from. And to do that, I did have to convert our daily into a weekly to be able to put in enough price points. I'll convert it back because I do want to keep these studies in. But that particular price point comes from this bottom right in here. You can see that we can just simply draw our line across, and this is a substantial area that we need to see gold hold if, in fact, we're not going to see gold possibly break below 1100 and even test $1,000 per ounce. So easy do we see the market rise, and so easy do we see it fall. E-mini, Standard & Poor's 500, this is a weekly chart. You can see how this market is closed dramatically lower. However, to really get a sense for what we're looking at, we need to move to a short-term chart. We'll look at a 720-minute chart. And traders, this is the chart I talked about. Look at this dramatic move that we saw as this market hit a high of 2120 this week and is now back below 2100 at 2071. Now, the other interesting thing, and we talked about this yesterday, and we touched upon it a couple of times this week, but it really seemed clear to me yesterday, and that was the fact that we looked at this chart and said every time we get this kind of a rounded top, we get a substantial sell-off. Rounded top, we get that sell-off. Now, this we call tower tops in terms of a candlestick pattern, and that's because it's only a few candles. You're not getting this rounded top like you are, but we identified these areas where we saw dramatic retracements, and then we also said, look at this. We've got another rounded top, and that, of course, is before today's trading activity. So we were kind of aware that there was a real possibility that we would see the equities markets sell off in the way that they did, and the jobs report was a very, very interesting scenario in that the report was positive, but then they focused upon wages. And so we really saw this market trade substantially lower. And when we look at the VIX, this of course is the volatility index, you can see how we've really ratcheted up. And if we take these particular points in which the marketplace itself was trading at and line that up with our weekly, you will see a correlation to the market getting top heavy, correcting, and having that VIX move higher. Crude oil, again, under substantial pressure, again, below $50 an ounce, even though it's very, very slight. But if you recall from how this chart has looked over this last week, of course, we are at the beginning of the month, but it was green. It's now unchanged or doji-like and could easily go red and then continue to drift lower. We had the first signs that we had some potential support. Beginning of the year, market hits just about $41, $42 a barrel and then recoups and seemed to try to form a base over 50, but was unable to do so. Lastly, silver. As you know, I've been absent from making trade recommendations in silver. My suggestion has been to simply utilize that capital and put it in gold. It wasn't because I did not believe the potential. The reward potential wasn't there in silver. And in fact, the reward potential in many cases is greater in silver than gold. It's simply because of the ability to control risks with good volume and not having the extreme ranges in terms of percentage moves that you tend to get in silver. That being said, if we see a follow through in gold where it breaks below our key identified marks and we enter short positions in gold, my sense is that silver is quite a ways to go in terms of a target. As I said, my target with gold would be roughly on a major break as low as say 1,000. That would correspond to gold going not so much to 15, but even possibly testing back to 14. Now, we are certainly not there yet, but we hit the numbers we were looking for in terms of a longer term trend play. In other words, if we think there's going to be a virtual meltdown in the market. And for traders that took my strategy yesterday, we will put out a notification of where to trail your stops. You actually have a pretty good trade on your hands. This has been Gary Wagner wishing you as always good trading. Talk to you on Monday for another daily update review. Bye-bye.